Hi, good morning, everyone. This is your tutor for accounting IGCSE here, Alwin speaking. So, have you guys ever wondered where to find old cars or second-hand cars? Or have you ever wondered if, let's say, you have old cars and you do not want them anymore, the car has totally break down, cannot be used, what to do? Do we just throw it like that, or we sell it off? So the topic for today's video is none other than non-current asset adjustments. Number 2, disposals. So have you ever seen places that has all of these cars like here? Now in Malaysia or in KL, you might have seen somewhere along the street, okay? Sometimes along the highway or some street, or some very quiet area with all those factory area, those kind of quiet industrial area. Then you'll be seeing a lot of car spare parts being piled over each other. Or sometimes a place like you see somewhere in the corner of the street, they say collect recycled cars, or collecting recycled old unused metals, or collection of old second-hand furnitures and things like that. So this is a place where we make our disposals. So what is actually disposal? And why disposal happens? So disposal happens when our non-current asset has reached its end of the useful life. It's like already very old age already, and it cannot be used anymore. Too much of problem. You just have to sell it off and replace your existing one with the newer ones. Then you sold off your non-current asset as a second hand, then that is a disposal. Totally spoiled. Or cannot be used, unusable. Then you're going to replace with a new one. Okay, so this is our motor vehicle over here. Now, the car spare parts, some can be still used. So the owner of this car disposal center have to use its own creativity to sell off all the car spare parts that are still usable. Yeah, this place is like a recycling center though. So we have cars that we do not want. We also have metals that we do not want, or anything. We can sell it off to some people, okay, who does the collection of that, and they reuse it and recycle and they reinvent something out of it. Okay, so this is the disposal issue. Now, how will it be the accounting system then? The accounting treatment. Okay, now say in 2025, we buy a motor vehicle costing 50,000. Then this motor vehicle would be a motorcycle then, or a very cheap car. We buy it. Our accounting period is from the January to December basis. We buy it on January. Okay. At 1st of January, we buy using check. Okay, and then our treatment for the accounting is 10% at cost. Okay, so this motor vehicle, for the past 1 year, unfortunately, giving you all kinds of trouble. And so you decided to sold it off at the end of the second year. So this is your year 0 though. This is your year 0, the year you buy. 2026 starts to give you a bit of trouble, a bit issue here. Then you cannot take it anymore. So during the year 2027, you decided to sold it off already because it's too much of this, a lot issue. So you're going to sold it off. When you sold it off, let's take it 31st December 2027 for a profit of, okay, you sell it at, let's see, maybe you sold it at 30,000, okay, by cash. Okay, let's take this as an example. Now, the one compulsory things to do here is the depreciation calculations. Once you are well versed with the depreciation, disposal will be just easy. Okay, so our depreciation, then our accumulated depreciation, well, provision for depreciation though. Okay, so this is your year. 2025, you buy it at 50,000. Multiply by 10%, they will give you a 5,000 depreciation. So your accumulated depreciation will be 5,000 also as well. Okay, now 2026 will be the same thing. So total accumulated will be 10,000. 2027, during January up to December, you are still using it. So the depreciation will be still charged as 5,000. So you have an accumulated depreciation of 15,000. But at the end of the year, you sold it off. So how does it work? Okay. Now here I will open up all the T accounts. Okay. The T account for your motor vehicle. Okay. Motor vehicle account is all at cost. Okay. Motor vehicle account. You buy it by check, so you debit it. Okay, you buy by check, so this one, money go out, so bank goes out, bank credited. So what you debit? You debit your motor vehicle because motor vehicle come in. So you debit it with bank, 50,000. So nothing happening. So December 31, you have as a balance carried down towards the next year. So 2026 will be the same thing. January 1, balance brought down, 50,000. December 31, 2026, balance carried down, 50,000. 2027, okay, January 1, balance brought down, 50,000. However, at the end of the year of 2027, on December 31, what happened? Okay, disposal happened. So your first step, once you are dealing with disposals, is you throw away your non-current asset. So once you throw away non-current asset, you will credit that particular non-current asset because you throw away. Asset ma, it's a debit balance. So once you throw away, you credit it. And where do you put into? You put into something called the disposal account, the D account. The main thing to know here is this. Now, disposal account is a temporary account. It doesn't have a balance. We use this temporary account to fund profit or loss. Okay, so this is your first step over here. Throw away non-current asset. And your motor vehicle account already got nothing. There's no balance. Secondly, we need to perform the depreciation account. Okay, we call it provision of depreciation. Provision for depreciation for motor vehicle. Now we all know the double entry will be very, very simple. The double entry will always be you debit your income statement because it's an expense and you credit your provision for depreciation. So provision for depreciation for motor vehicle will be credited. Okay, this is as per 31st December. Always the provision is being credited at the end of the year because only at the end of the year you can do your adjustments. So we put income statement. So I put here in general, abbreviation. With which amount? With all this amount. 5,000. And therefore, I will have a balance carry down, 5,000. Bring it to 2026, January 1, I will have a balance brought down of 5,000. Okay, provision is always, balance carry down, brought down all the time. And during 2026, I have another 5,000 of depreciation. And therefore, my accumulated ones will be 10,000. So 2027, January 1, I have a balance brought down of 10K. Notice that the balance carried down is always the accumulated depreciation. And the one's income statement here is the depreciation for the year. Then this year, I've been using the the motor vehicle for the entire year. So I need to charge depreciation. So my total accumulated depreciation as per 31st December is 15,000. Now, because something happened at the end of the day, I sold this motor vehicle off. So therefore, there is no more balance brought down. Instead, the entire accumulated depreciation up to today will be thrown off. So a provision for depreciation is always a credit balance, okay, as we see here. Now, once we throw it away, we will debit it with what issue is this? Disposal. So the entire 15,000 is being disposed of. So step number 2 will be you throw along its accumulated depreciation. So depreciation is a credit balance. So when you throw it away, you debit the provision for depreciation. And so what you credit to, you credit into disposal. The main one will be this. You throw away your provision. So meaning to say you'll be like this. You're like, minusing off the entire accumulated depreciation becomes nil. Lastly, we will draw up our disposal account. Okay, let's do it here. This is during 2027. Okay, all everything is on the 31st December. So when we throw our motor vehicle, when we credit our motor vehicle with disposal, and so during the disposal accounts time, we will debit it with the motor vehicle over here, 50,000. Then when we throw away our provision for depreciation, meaning the accumulated depreciation, we debit our provision with disposal. So during the disposal account, we will credit it with the provision of depreciation, 15,000. So how much do we sold it at? We sold it at an amount of 30,000 that we collected by cash. So means with the third step is to find, okay, you get money in. So we will debit cash or bank. This is the main part. And so we credit our disposal. So this is the main part. So disposal is being credited with the name cash. 30,000. Okay. So now we have to close the account. So which side is bigger? Okay, 50,000 over here is obviously the bigger one, so it will be closed with 50,000. And what is left over here is 45K, so you have a 5,000. Meaning, unfortunately, you make a loss on disposal, in which you will put into the income statement. Sometimes you write loss on disposal, or sometimes they just put it as income statement. Anyhow, if it is this side has a balancing figure, that will be profit on disposal, in which it will go into the income statement as an income because profit. If for loss on disposal, that will be an expense. So this is how we do it. Okay. How to know why they are profit, how to know why they are loss. Okay, we know we have a P and L account, profit and loss. Always profit will be on the left side, loss will be on the right side. Therefore, for this disposal account, profit is on the left side, losses will be on the right side. That's how you can remember it as it is. So if I were to produce the income statement for all the years, it will be looks like this. Okay, income statement for the year ended. Okay, well, everything is an expense. 2027, 2026, 2025, dollar sign. Okay, one of them is the provision for depreciation. 2027, we still have 5,000. Every year has a 5,000. And then we have a loss on disposal. That will be in 2027, 5,000 again. As for SOFP, as at 31st December, okay, of all these years, 2025, 2026, sign, 2027, the dollar sign. NCA, our motor vehicle at cost, 2025 will have, how much again? Okay, 50,000. Okay, 2026, 50,000. And 2027, you have nothing because you sold it off. Minus provision for depreciation, and you get your net book value, 5,000, 10,000. Here you have 45,000. Here you have 40,000. And here you have nothing. But current asset, you'll be receiving a cash 30,000 over here. Okay, so this is not a full SOFP, full income statement. This is just abstract. So this is how disposal works here and the accounting treatment for disposal. Right? So that's all for today for the adjustments on non-current asset. And I shall see you all again for our next adjustments called errors, mistakes. Well, mistakes bound to happen. So See you all again soon. Bye-bye.